Welcome to Ben Talks Money. Here we discuss stocks, investments, ETFs, and personal finance.
What just happened in the stock market this week? We saw an incredible day on the green side on Monday. Tuesday, the market did almost nothing. Wednesday, Thursday, we saw the biggest drop in the market since April. And on Friday, the market was down almost 2% pre-market, and then it closed almost flat. The Nasdaq closed almost flat by the end of the day. So what's going on in the stock market? We had the government reopen and we all thought, okay, we are ready to go again. But it turned out to be a sell the news event. It looks like the AI trade is still struggling. There's still fears and worries about evaluation in a lot of the companies. There have been questions about NVIDIA's 5 trillion valuation. All this AI infrastructure, the spending is becoming an issue for investors. So the market is struggling right now. And next week is going to be pivotal. We need to have a direction next week because as of the close on Friday, the market is back to where it was last week, Friday. We went 5 straight days of trading and came back where we ended up on Friday last week. Hi, welcome back to Ben Talks Money. My name is Ben. I have an MBA in finance and management. I've been trading for 8 years and I'm a full-time options trader. In today's video, we will take a look at the daily chart of the Nasdaq and the S&P 500 and also the big names to look at where we are as of the close of the week and possibly where we'll be heading to next week. So if you are new here, please subscribe to the channel, like the video, share, and humbly please help me get to 4,000 subscribers. I'm close to it, and your subscription will go a long way in helping me achieve that. So let's jump in and look at the daily chart of the Nasdaq, the S&P 500, and the big tech names. So first of all, let's take a look at the daily chart of the QQQ, the Nasdaq ETF. And if you look at it, you can see that on Friday, last week Friday, this is Friday right here. Last week, we went from right here, almost an all-time high of $632. We pulled back all the way down to $600, which was the 50-day moving average. And then as soon as this thing hits the 50-day moving average, we saw buyers come in, look at the volume right here, and push it all the way up to 610, and we closed there. And then we jumped on Monday to 623, and after that, Tuesday was almost flat. Wednesday was a down day, and on Thursday, it was ridiculous. So Thursday, the Nasdaq dropped almost 3%. And on Friday, pre-market, this thing was down below the 50-day moving average. You can see right down here that it was down below the 50-day moving average. Almost the exact same level of the lows on last week, Friday. So it came in and it held. And when the market opened, we got a push. Look at the candle here. You can see the candle. The volume here is almost the same as the volume on last week, Friday. So what does that tell you? It tells me that people are looking to buy around the 50-day SMA. Right now, the 50-day is looking to be a strong support level in the market. We came full circle in the market. We ended last week Friday right here around 610. We went to 620 and came all the way back to close Friday around 610. So if you just saw the market last week Friday, didn't pay attention to the market the entire week, and you open your brokerage account this Friday, all you saw is nothing happened. And that's true. We went all the way and came back to full circle. And right now, we are hovering around this level, the 610 level, with the 50-day moving average 10 points below. And if you look at the SPY, which is the ETF for the S&P 500, it's exactly the same thing. If you look at the profile, this is last week Friday. This was the lows. 661 was the lows last week Friday. Buyers came in, pushed it up here, and we closed around 650. And then on Monday, we jumped. We came here. The highs was on Wednesday, which was around 683. And then Thursday, we had this big drop on Thursday. Friday, pre-market, we got this big drop. But if you look at the wick of the candle is straight into the $660 support area for the S&P 500, for the SPY, which is exactly the same as what is going on the QQQ, the Nasdaq ETF. So the entire market is behaving exactly the same. Let's take a look at NVIDIA to give you an idea of what I'm saying. If you look at the NVIDIA chart, look at it. This was last week Friday. We got a push close here. And then what happened? Monday, we got here, the highs of almost $200. Tuesday, Wednesday, a big drop on Thursday, came straight into the 50-day, close above it. On Friday, it opened right down here, the same level, the chart looks the same across board. This is incredible. We came in here, push it, and close above it. If we take a look at another one, let's take a look at Tesla. So Tesla is a little bit different. I think they had a news. There was a news on Tesla. So this chart is actually looking bearish on Tesla because previously I was looking at Tesla because it was trading within this zone. It was trading in this zone for more than a month. You can see here between $410 to $465. It was trading around the range, but they had some bad news about the battery and some recalls. And when such a news coincides with a market drop, it just gets worse. On Wednesday, he came in here, he held the 50-day. Thursday, the market dropped and it broke below it. On Friday, it couldn't come above it. Right now, Tesla is holding the $400 zone, which is usually a psychological support and resistance zone. So if you are interested in Tesla, you might want to either see a hold of the 400. The 400 is a really strong area. And if it holds the 400, you might want to wait on Monday and probably after NVIDIA's end. But if it holds the 400, maybe you can start a position around the 400, or you just have to wait for it to break above the 50-day and hold. But at the same time, if it holds the 400, you can take a swing trade into the 50-day, and the 50-day coincide with the beginning of the range that it was trading in. And from there, you can reduce your position and see if it's going to hold the 50-day. If it holds the 50-day, you can add to the position, use the 50-day as an exit point, and then you push to 460, which will be the top of the range. The market is a little bit iffy right now. And the funny thing is that the ETFs that usually are safe havens, like the gold, the copper, Bitcoin, they were all down, right? They all came down. If you look at gold, look at it. It's almost the same. It also came full cycle. Monday, Tuesday, Wednesday, Thursday, Friday. And we are back to where we started. It's the same thing. So it's a little bit hard if you are looking to diversify, because where is the diversification if the ETFs, the metals that are supposed to be safe haven, those that are supposed to go up when the market is coming down, those with negative beta, they are all coming down or going up in the same direction as the Nasdaq. For the past 12 months, gold is no longer a safe haven. It's just a traded asset that people are trading just like the stock, because the way it's behaving, the safety is not there right now. It's very volatile. And if you're hedging, you hedge with assets that are not this volatile. That's why a lot of people don't like Bitcoin, because it's very volatile. What are we looking for next week? Let's go back to the QQQ. So what we look for this coming week is, first of all, we have to be mindful of our sizing, because NVIDIA has their earnings coming up next week and is going to have a strong influence on the market, the price action. So you have to pay attention to the $600 level on the QQQ. It's a strong support area for the QQQ. If you look at here, this zone, all these zones, it's a strong area for the QQQ. And you can see last week, Friday, we broke through it and the buyers came in immediately to push it up. On Friday again, we broke below it pre-market. The buyers came in to push it up above it. In odd occasions, the Nasdaq has closed above this level. So there's going to be a day that the Nasdaq closes below the $600 level, which is the 50-day moving average for the QQQ. Then it's signaling a bearish trend. It's signaling that maybe the buyers are not there anymore. Whoever is buying at this level, maybe they are done or they are no longer interested. And then you can see a drop down to probably about 550 level. The 550 level will be the next strong area. I mean, 590 is strong, but it's not going to hold. If it breaks below the 50-day average, 590 is not going to hold. Might get about 10% downward move, which will be a market correction. So pay attention to the 50-day moving average, the SPY, and the QQQ. You need to pay attention to it this coming week. And if at any point in the time, if any day it closes below the 50-day moving average, you have to be mindful of the positions. It's either you find a hedge. If you have some stocks, you can sell covered calls to hedge. You can buy puts to also hedge it. Now the market is looking a little bit on ease right now, and we need to hold the 50-day next week so that we can at least get a push on the upside going into the Christmas holidays and the Thanksgiving. If we're able to hold the 50-day moving average, at least we can go back to all-time high, get a couple of weeks or at least a month of another upside going into the new year. So that's it for the video. If it was helpful to you, please like, share, subscribe to the channel, tell a friend to tell a friend, and until next time, let's keep talking money.